Hey, Alpha fam, welcome back to another episode of Alpha Commission. Today on Alpha Commission, we want to answer the question, just how low can it go? Of course, we're talking about Bitcoin, the falling knife here, the thunderbolt from heaven. Are we going to get a relief rally, or is this thing just going to continue to trash down? And I would say that there's a high risk of it just continuing to trash down as long as the Bitcoin miners are capitulating and the institutions are at bloody war with each other, right? They're all trying to liquidate each other, create that capitulation event, and the miners are struggling to stay afloat. And so they're basically the only thing holding up Bitcoin right now. And when they sell all of their Bitcoin, we are definitely going to see a real capitulation, assuming that Sam, the superhero over at FTX, doesn't come in and bail everyone out, which apparently he's just throwing $250 million here, $250 million there, just to quote unquote, save the community, right? Support the community. Not really sure how that works. Capitulation tends to be a very natural process in markets. It's extremely healthy. It wipes out all the bad players. It helps with consolidating players. You get lots of mergers and acquisitions. And we basically need to have capitulation in order to wipe the slate clean and start over in a healthy way. And so when you just have all these subsidies from Uncle Sam, by that, I mean, of course, over at FTX, not US Uncle Sam, then what we're talking about really is just something very unhealthy, which, by the way, is quite like Uncle Sam in the US bailing out all those companies who basically just pocketed the stimulus money to the tune of trillions of dollars, and we have no idea where it goes. They don't have to pay it back. Rumor is that they just bought up all their cheap stocks, and then what happened when interest rates started to rise? They dumped it on you and me. So hey, folks, that's your tax dollars hard at work there. You just paid for Apple to buy its own stock and then dump it on your head. Okay, hey guys, let's just imagine, if you will, what's going on here. Well, you can see that we had a gigantic, right, bear flag here, which did end up playing out. Check it out. Like, we're at the bottom of that bear flag. Boom, boom, right? And all of these little bear flags along the way have played out. Boom, boom, right? This one, boom, boom, just right to the targeted area. And what do we have going on right now? We're putting in another bear flag. Check that out. Nice little bear flag setup here. And guess where that's going to take us? Of course, to my favorite number, somewhere around $10,000. And conceivably, it could even take us a bit lower, but let's just give it a nice round figure of 10,000 because we don't want to scare the children in the audience too much to think that it may go as low as 7,500 or perhaps worse if this pattern just continues to be ugly. That said, there is the possibility of a nice bull rally, which could extend the flag upward a bit, and maybe the measured move would be a little bit more generous. But unless this is going to be a bull run, I really don't think that that changes the target significantly enough to matter to most people. It means that $20,000 Bitcoin is probably overpriced. Okay, guys, let's jump over to the stock market. Let's just see what's going on. Let's see here. Of course, we were talking about, the weirdo concepts of all these Elliott waves, and well, I love hearing about Elliott waves. I just have trouble believing in them. A lot of the times we talk about these ABC, 1, 2, 3, 4, 5 patterns, and it's just when it doesn't work out, like, they just stop talking about it, right? But when it works out, they're like, oh, that was an Elliott wave, right? Well, I'm not really sure that that qualifies or not. It's sort of like harmonics and these triangle patterns. I mean, it's all price action, guys. Like, we can put as many patterns as we want anywhere, and you can just have some type of mythology about it, and maybe there is a statistical likelihood that, certain setups are more likely to result into one way or another. We just can't put too much into it, right? At the end of the day, we have to watch the price action, and our price action is just telling us that we are at the middle of this kind of range here. And just like yesterday, we really needed to acquire 11,800 and really just secure that area if we want to have a nice bullish look with those higher lows, such that perhaps we really do get a nice rally and maybe even continue on for a bullish turnaround. Of course, if we do end up breaking down, of course, we might be able to put in some type of double bottom or something, but who knows? Maybe we're going to lose support, and then, it could be devastating for us, right? We're going to be getting into this bearish territory. And even if we get a rally, who's to say that it isn't one of these five Elliott waves that takes us down to my targeted region of 9,000 to 9,500, which, by the way, would correspond pretty nicely with the golden pocket of the fib retracement of the low of this market to the high, and also the the kind of midpoint between that golden pocket and the 786. 786 being a pretty good target for a full reset of this market, if not lower. Of course, you can see I do have the bottom of the range here at 8,000. Not to scare people, but kind of to scare people. Let's see, moving on to the QQQ. Of course, we've got exactly the same thing over here. We're just looking to see if we can recapture some of these CME gaps, and that would look much more bullish than our current posture. We are holding on to support, but we do have some potentially ugly drops, some capitulation ahead of us if we do break this area, which has a nice consolidation over here, but if we do lose it, hey guys, I'm telling you, we're entering the capitulation zone, right? It's that danger zone, right? That Maverick warned you about in a Top Gun, right? We're entering the danger zone. So either we're going to get a nice run, and I don't really know what would encourage that, except beautiful PCE data, perhaps at the end of this month. And if we do look at the economic calendar, you can see that the only thing we have this week is basically Jerome Powell testifying in front of Congress once again, as well as some 5-year inflation expectations, which I don't know about you guys, but that doesn't sound like it's going to turn out to be good. I mean, who knows? Maybe there's some bullish news in this Friday 5-year inflation expectations report, the final version, apparently, as well as consumer sentiment, right? So, again, guys, on Friday, we should be getting some data which might just change the dynamic of the market. And then we have, Jerome Powell opening up his big mouth again, which he just rambles on and on about any topic in the most weirdest ways when he's in front of a question and answer session in the on the Federal Reserve podium, but when he's in front of Congress, he sure doesn't want to say much. I don't know. Maybe he's afraid he's going to go to jail or something. But yeah, this guy is basically the biggest legal theft. I mean, he. This guy has conducted the biggest legalized theft in the history of the world, and has basically distributed money from, I'd say, the bottom to the top, greater than, just anything we've ever seen before. And yet both Trump and Biden have put him in power. And that just speaks a lot to the politicians that these nut job political parties, the Democrats and the Republicans, they're both screwballs. Neither of them are helping you. They're focused on some of the weirdest things. I mean, they have no clue what's going on or what people really need in their lives. And to be honest, I think they're just trying to justify their jobs half the time and turn us on each other so that we don't notice what they're doing. But guys, we were just robbed blind for the last couple years to the tune of trillions and trillions of dollars, and it was both guys. It was, President Biden and it was President Trump signing off on it, giving the okay, and actually championing both of them those expenditures. So, guys, again, pay attention to what's going on. Hopefully, we can, change the direction for the future. After the shock and awe of whatever's to come, wears off. But in the meantime, we're at the mercy of Jerome Powell, the most powerful man in the world. And again, look for that data on Friday. Okay, let's go ahead and just move over to the NASDAQ. Again, guys, similar things. I'm just applying this principle of Fibonacci's to the chart because, I mean, we have a lot going on here. And I think I'm going to stop tracking each one of these things. Not really sure what's going on with that trend line. Where did that come from? But yeah, I mean, these things are just lining up with my target areas. And so I'm going to leave the fibs on there. They also turned out to be pretty nice bounce points. You look at this support over here, 382, got deflected at the 236. This is just muddying around a bit at the 0.5, and I guess we might just break negative, but let's go ahead and see how that plays out. Again, we're just in the middle of these ranges. You probably want to see us, capturing 158 and getting a nice bounce to really have a show of bullishness. Otherwise, we're just middling around, and who knows, may test those lows at 146. Let's see. Let's just move on to the SPY S&P 500. Again, same thing, same look, just middling around, right, on the upper side of support. But really, what we want to do is fill in these CME gaps up here at the 380s, and preferably just keep going from there. But so far, we're just mucking around, sideways crabbing right now. Mini futures, very similar. Not really much to add here. We did get over that point of potentially breaking negatively, but who's to say how's it going to go? With Jerome Powell giving testimony, and of course the data coming out on Friday. So we'll all be holding our breath for that. Same thing, S&P 500. Not really much to add here. I think I may just use the fibs from now on instead of support because they do seem to be working so well. But we are getting into these treacherous areas, so let's just see. And the Russell is going to be a pretty big indicator of this, whether or not it can hold onto this support zone. If the Russell breaks down here, it's going to be a pretty bad sign for the rest of the market. The Russell does seem to be leading that path to the downside. It's well below the 0.5, and it is entering this choppy area just in the middle of the range, right at the top of it, just barely holding support. But again, if we break down, we're really going to be testing these macro support levels, which would suggest a potential full reset in my mind, and which, interestingly, the trends here would take us to the golden pocket, the 0.786 and the 0.886, which is just pretty interesting that they lead directly to those fib levels. Hey, whoever said this market was manipulated? I never said that. Let's see. Let's go ahead and look at the Dow Jones. Dow Jones over here around the 382. And just basically doing the same thing everyone else is doing. Let's go ahead to go to the 4 hour, trying to hold on to this level. Hopefully it can get a little bit of a bounce today, but who could blame it for breaking down, right, and going back to potentially this support. But again, like it loses this area, and similar to the Russell, it can just get below that zero point 0.5 and perhaps get down to these golden zones, in which case it might be testing some of these levels here. Man, sometimes TradingView really distorts my lines, but maybe I was just playing around, just trying to get a concept. Let's go to the weekly. Let's see what I was thinking here. Okay, yeah, I was trying to think about how these triangles have been breaking, because this obviously has a very long history, and so we can see it coming down 40%, 50%, 40%. Could this be a 50%, right? Maybe that something like that. That would be pretty insane, but it's happened before, right? It's happened before, guys. So, let's pray that it holds that golden zone and this upper trend, because that lower trend is going to be a doozy, and that one took, of course, uh, more than a decade to recover from, almost a decade and a half. We got a little bit of a nice high here, but super crash. So, yeah, that's it for stocks. Let's go ahead and move over to the dollar. You can see that the dollar is still bullish, just like we were talking about. It did manage to hold on to that support, and I'm still projecting, perhaps 110 or whatnot, taking us into those historical levels, which this chart doesn't have. But anyway, that's going to be a negative pressure on the market. And so you're going to want to watch to see if the dollar continues to push up, as well as the VIX. Right now, the VIX is coming down. This is a volatility index for the S&P 500, and generally that's a good thing. We tend to have good trading days when the volatility comes down. But on these lower time frames, you can see we are actually at that trend support. So not sure how that's going to play out. There does seem to be a bit of a bullish drive here, which would suggest perhaps we pop back up. And, just by the look of this chart, it would look like it would perhaps want to pop back up. So that could suggest some potential negativity. But we do have this slope here, which could also suggest that perhaps we also have a chance of just dipping lower. We're gonna have to watch to see which one of these trends wins, because it's obviously in a conflict with each other here. But we're just getting wedged into this. I would suggest probably it's going to pop up with some terrible news about inflation, but hey, they can cook the books, and in the Fed, and sometimes they do, and then they change the numbers later, which always struck me as pretty funny. They say they find the new data, but what were they doing for the month they were collecting it? I mean, okay. But moving on back to BTC, of course, we were talking about the macro, but just assuming that we can put some type of bullish pattern on, because obviously, I mean, bullish trend, because obviously just the pattern of a bear flag can't be that reliable. If we do start getting some type of bullish run, then maybe we can have some projections to the upside. And right now, on just the lower time frames, we are kind of breaking that trend. Uh, looks like we retested the breakout of this downtrend, and a little bit of a rejection here. That's not really a bullish response, not really what you want to see. But we do have some drives of bullish divergence there. Bunch of good drives of bullish divergence on the 4 hour. On the daily, I guess not much. But Yeah, on the daily, it does look like this type of pattern is playing out. So, maybe it's just going sideways for a couple more days. I would suggest, as I've been suggesting before, that we're basically repeating the pattern that we had over here on this upper level right here during the last month. And if we look at our local setup, maybe 4 hour. Oh, hey, look at that! It's just following my LARP lines perfectly here, where the curve is actually being uh, respected really well. And of course, I was just modeling that off of this as kind of a fractal because I did notice that the indicators had a very, very similar setup. And so this was pretty expected. And if we just continue to muddy around until perhaps we get some good news, maybe Friday we'll have some good news for us, right? And we can pop up perhaps to the top of the range, similar as what we did up here, right? Kind of fake people out and then maybe a drop. And if the end of the month ends up being really bad with the the PCE data, then who knows? Maybe we enter capitulation. If the PCE data, which is that inflation report, if that ends up being good news, then perhaps we can break above the daily 50 EMA, and that would perhaps carry us into a squeeze play to some higher levels, which I think would then set in motion our macro relief rally, at least at least enough to put in a higher low for the bears to potentially bring us down later on, but we do want a relief rally. I mean, it's just good for the market, and we can really reassess all the different prices that are potentially being set up. And so hopefully we can get over that 24,000 mark and maybe capture that 25,000. If we can hold this area pretty well at the end of the month, perhaps, then of course we would be looking forward to that perhaps bullish drive upward. I don't know, into this 28,000 maybe. There's a couple of places to look at. There's a nice wick here at the 25, which may just trash us down. And then we also have a lot of resistance in this $28,000 area. We do have some CME gaps also in that area, so that would be a pretty good location to look at. The Elliott wave here, same thing as with stocks. I went over it on the last episode, but if you kind of buy into those things, I mean, hey, it would bring us in line with that bear flag right here. And so I'm having lots of confluences here. And then, of course, we do have the fib structure, which is very similar to stocks, would suggest perhaps even a deeper drive down as low as 7,000. Or if we can hold that golden area, as many of the stocks are trying to, then perhaps 10,000 would be a round number to be targeting. But who's to say? Who is to say? We do need Bitcoin to slow its descent as stocks are falling, because the proportional relationship to the price decrease of Bitcoin to the stock market is so high. It's like 2x to 3x, depending on which index you're looking at, that this thing will be driven to zero if stocks do end up doing a total reset the way that it looks like they want to do. Bitcoin will be driven down to zero. And do I believe Bitcoin is going to zero? No, of course not. What I would suggest is that the price relationship, the ratio, starts to slow down. So instead of 2x the NASDAQ, at some point we'll start to see that it's moving only 1.5x, or maybe it's moving 1 to 1. And that type of slowing down will be a very good indication that we are reaching the maximum capitulation, and then we can combine that with perhaps the the overall volatility in the market and some of these other metrics in order to say, hey, maybe we've reached a bottom, and so we could be pretty comfortable buying in there. But I really do want to see Bitcoin slowing down its correlation with the stock market. It can't just be moving 3x the S&P to the downside. If the S&P moves down like a 33%, then Bitcoin is going to move down 100%, right? So we can't have Bitcoin going to zero with this current correlation. And so again, guys, look for that slowdown. I think that's going to be the biggest clue that we're starting to reach the bottom. Otherwise, we would be looking for stocks to be bottoming out themselves, because let's say that we don't go like 30%, 33% down, right? Let's say that the S&P only goes another 15% down. Then yeah, it's possible for Bitcoin to do 3x that. It's possible for Bitcoin to go 45% down if the S&P goes 15% down. So that would be a nice 3x of the S&P, and that would bring us to approximately that $10,000 area, right? But and so maybe the correlation doesn't have to break with the stock market as long as the stock market stops at reasonable levels. If the stock market keeps going, however, I think at some point we're going to see a decoupling, not a decoupling, but just a reduction in the degree of coupledness. I'm not really sure how to say that, but you get my point. If we do see that deceleration, then it will be a good sign, guys. Yeah. But however, if it keeps the relationship, if the stock market just keeps dropping and Bitcoin keeps the relationship, I mean, I don't know what else to say except that we could be plucking tulips and this thing could go to zero. I do not believe that, but the relationship would allow for it as it currently stands. Okay, probably don't need to go into too much more detail on that. We did have, again, this breakout setup. The MACD is, it's positive. That's a 1 hour. Let's look at the 4 hour. It's weird. Let's look at the daily. Okay, the daily gives a pretty clear picture. So it looks like we are just going to be waiting for that news on Friday, and then we can see if we can get a clean crossover. I think in these type of downtrends, you probably don't want to be taking the, buying the dip unless you have a very clear setup on your chart, because of course any one of them could be a fake out. And you really don't want to just to be buying so close to the crossover and then to be rejected and then suddenly fall off the cliff or something like that. You really want a hard crossover. And let's see. If we look at the previous month, right, that kind of previous setup, you can see that the MACD did have a nice crossover here. And, it started to get a nice crossover here. Then we kind of got it confirmed. And so this was a nice play. It was falling here. It started to round. And you could have tried to catch that. But, and then there was lots of indications that we were, potentially at a floor there. It could have continued down. But we had a really nice setup here where we also had some type of continuation to the upside. And so as soon as the trend, suggested a floor, then you could have taken that bullish trade. And probably the same thing is going to set up here. The only thing is that it very quickly unwound. And so right at this point, just by using the MACD, you don't need 100 million indicators, but just by using the MACD, you saw that it started to pinch together. And you probably would have wanted to front run that signal, just to pocket any profits that you had, which you probably did when it was turning around up here, getting rejected by the 34 EMA. But the key point is you're going to want to be able to bail out of this market if you are taking a long position. So same thing here, right? So let's say that we get a bullish cross and the MACD on the daily, just continues to rise like this, and we could even get a nice rally. As soon as you see it starting to pinch off, just personally, I would front run that signal because even though it could continue to go, and I could get back in if it like kept a bullish cross, right? Or if it crossed back bullishly. If we do get a negative cross, I'll just want to take my profits out immediately because the overall trend in this market is really, really bad, and it could be a very sharp fall if we don't get a nice relief rally. And it's just becoming more and more and more merciless, the direction of this market. And I do suspect that there's potentially one more major drive down, if not maybe one and a half, right? Maybe some type of a retest or something, and then the consolidation. But we do have the setup for that potential to cross bullishly. We have some, nice Stokes being pointed in the upward direction. We have, of course, the oscillators suggesting a probability of upward momentum coming up, but I don't see a hard signal here. Yeah, this isn't a hard signal yet. This is just a suggestion to be on the lookout for it, and then similar with the MACD there. Let's see here. Can I go over to this chart? In our alpha channels, we're just, again, middling in that kind of juicy area that we've had historically, where it's tended to be a very nice place to buy. And so I don't want to be over bearish with you guys. I'm just saying that on the macro, because we have to consider everything in this cycle, we can't just consider crypto. In the past, you could just consider crypto back here. But for right now, we're really looking at a lot of factors in the bigger markets. And that would suggest potentially more downward action. And so we're going to want more confidence, more confluence, more confirmations before we really take a long position, because that's just wise. And none of our EMAs, suggest any type of bullishness coming up whatsoever. It all looks just terrible. And so we're just going to want to see where does this take us. And these EMAs are actually more sharply pointed down than they were over here, at least the 89 and the 50 and the 200, So who knows? Who knows if this is done, if this move is done or not? We'll just want to wait for some rounding. Let's go ahead and just look at the indicators that I have here. Okay, the demarcation is actually looking pretty okay for the possibility of a turnaround. So that's that has confluence with the RSI. So if we do get some bullishness on the charts at the end of this week, perhaps perhaps it's really going to play out. We'll see. But okay, I think I can move back over here, and let's go ahead and just take a look at the CME charts. CME charts basically suggesting the same thing. We are still pointed down on the Stokes. It looked like it had attempted to point up, but it turned down again. So that's not a good sign. We don't want the Stokes to be pointing down when we're thinking about potential bullishness. So again, on the professional exchanges, this move, I mean, the move down might be over, but it isn't suggesting up yet. It's just suggesting a little bit of sideways, and also the MACD has a little bit more work to be doing. You can see it's kind of flattening. It's not really sharp. It's not sharply pinching off. It's starting to flatten a little bit, perhaps like this. And so there could be a little bit of a fake out going on here. Not sure. These are not supporting each other yet, so I have no interest in this. It's just negative. The oscillators are down. And then, of course, the Stokes can continue to be along the floor for quite a while, can kind of bounce around, but pointed up at least, at least there's a chance. You're saying there's a chance? Yeah, at least there's a chance here that maybe that'll continue up. But again, with the advanced Stoke still pointed down, I'm just not seeing the corrective move as ready yet. You can see it can go sideways for a little while here. So again, it's just suggesting to me a little bit of choppiness, perhaps for the next couple days. We'll keep our eyes on it. And if Jerome Powell doesn't say anything stupid or the data isn't just totally awful, then hopefully we don't get trashed, down to hell. Of course, we do have some type of trend here. Not much to say with the EMAs, but we do have some type of trend, both up and down. So we're just going to want to see, does this break to the upside or does it break to the downside? Otherwise, you can understand, just conceptually, we're in the middle of this wedge, and there's no need to take a trade in the middle of this type of a formation where you have both a downtrend and an uptrend. You just have no idea where the market's going to go. And I guess the market is probably waiting for Jerome Powell to finish his statements to Congress and for that data tomorrow to decide if it goes up or if it breaks down, right? And this could be quite a painful downward action, and that fake out that I was talking about could possibly happen. But everything else has a setup that wants to go bullish. So the market is really hoping to break to the upside. But you can tell, like, almost on every chart, it wants to break to the upside. But the professional exchanges and the nuance of it all is just leaving the possibility for a nice drop. And we can even see that in the stock market, where again we have this type of middling going on, not really any type of bullish grasping of those levels that we would need to hold in order to suggest bullish momentum. But at the same time, we're not really breaking any type of critical levels to suggest super bearishness. Definitely think the market is waiting for Jerome Powell to leave Congress and for the data, the 5-year inflation expectations tomorrow, or pardon me, on Friday, as well as the consumer sentiment index, right? See how sentiment is going. But yeah, that would be tomorrow, so Friday. And then perhaps some type of bullishness early next week or on the weekend for the 24-hour exchanges for crypto. Okay, guys, gonna wrap it up there. That was your alpha for the day. Stay safe and happy trading.